This is Tom Nunemaker with Capital Discussions. This is my trading update for Friday, September 12th, 2014. So we're looking at the volatility charts. We have the VIX cash on the bottom, the colored ones. The red is the S&P E-mini futures, and the horizontal, the parallel lines are the September, October, November VIX futures. So you can see that the VIX cash and the September futures got very, very close on Friday, but they had a nice little recovery. The market rallied at the end, and they came back apart. So the VIX closed at 1331, and the market, let's see, the market, SPX. The SPX closed at 1985.68, down 1177. And the Euro futures of December are at 129.77. And let's take a look at the price charts for those. SPX 3-month bar chart with daily bars. It looks like it's in a slight downtrend. It could hold here. It's hard to say. It did recover off the lows of the day and back into this kind of consolidation area. So it could still be going sideways. Still a little bit too early to tell if it's sideways or down. And here's the 2-day intraday chart of the ES futures, and the overnight action pretty flat. US market opens, shunk, down it goes, recover at the end, and that's what we saw earlier on the volatility charts. The Euro US dollar is a 1-month chart, hourly bars. Here's that ECB announcement that took the market lower, and it's slowly recovered back up to actually about where it initially sold off to. So we could go to a little bit longer term. So it looks like it might be in a bottoming or consolidation pattern. I have a put credit spread, which is bullish, so I'm hoping that it doesn't go down, that it stabilizes or goes up. So with that, let's take a look at option view. Here's the Euro position. The Euro futures options are down 1,100 bucks. We were down 1,600 a few days ago, so it's recovered a little bit, which you'd expect, and a little bit of an up move. Volatility coming out and delta coming in. So this is what our position looks like right now. Remember, as time shrinks, this time window keeps getting smaller, and our probability of profit keeps increasing. So at this point, we're still looking good. We have a positive expected return, which is nice, and a pretty high probability of this actually working out. Right now, our short puts are at minus 6.9 delta. We put it on with a minus 10, like 9.85, 9.5 delta. So definitely it's moved up. Delta's coming down. Just what we want to see. Let's take a look at SPX. Here's our SPX position. This is the combined position. We're down $81, minus 14 delta, positive 100 theta, minus 600 vega. So a lot of vega here. And if we look at the positions, there's two trades on here. We have a December trade and the October 11th trade. So let's split them up and take a look at them. Let's look at December 1st. This is a straight butterfly. It's up $251. And this is the chart. It's a narrow fly. So let's zoom out and see where we're at. So we're looking pretty good. We're still under the tent, and still lots and lots of time on this trade. Let's go back and take a look at the one expiring in October. Take this toolbar off so you can see it all. Okay, so here's our trade for October 11th expiration. Expires in 29 days. We're currently down a couple $100. I did add an extra put debit spread, so we're 9 by 17 by 8. Normally it'd be an 8 by 16 by 8, but I added another put debit spread here to flatten out our T plus 0. And actually, if I do the opposite of what I put on, you can see what the difference was. So with the existing trade, I have a minus 3 delta. With the old trade without the adjustment, it was a positive 10, and I was worried about it continuing to sell off, so I wanted to get a little bit flatter, even slightly negative delta. and our theta is good. Vega's pretty normal for this kind of trade. Here's where we are, and actually at expiration we're just down $100 over here, which obviously we would fix. I have a good till cancel order in to buy back that debit spread that I put on. So I put that on for, let's see if I can find the trade log here. That was the 1960, or no, 1980, 1955. That's this one. So I did that for $7.80. So what I would do, which I did do, is 7.8 times 0.75. So about 585, 590. So I have a good till cancel order to buy that back in. So my trigger price is like 5 or 10 cents above that, and then that's my limit price to close the trade out. And I did one other trade. So my friend Tony Sizemore at Option Elements does a weekly Russell Iron Condor. I think Tony's are 30 or 40 points wide. I put mine on at 15 wide, just a little narrower. I did a 10 lot, brought in $1,000 credit, 15,000 in margin. So this will be over in a week. It's a nice fast trade. So this is what it looks like, and 91% probability profit. So we'll just let it go and see what happens. And I'll update you on that. We'll see where the market opens tomorrow, but it has really nice data because it's a weekly. It expires soon. A little bit of negative Vega, and it's basically all price risk on these kinds of trades. I will update you after the close on Monday with how these trades are going and any trades that I did. And just in case you didn't see the trades from Friday, here they all are. If you want to grab, hit pause on the video, get the actual prices and the commissions. If you want to follow along in your trading software, you're more than welcome to. But otherwise, that's it for now, and I will see you next week. Good trading. Bye.